If you run a business or you're a 1099 employee and you aren't proactively planning for your taxes, there's a good chance you're missing out on thousands of dollars, and I'm going to show you exactly what I mean. Hi guys, Matt Speckman. I'm a CPA. We do tax planning here at Advantage Through Accounting. There's a lot of individual tax examples we could pull from to make this video, but there's one point I want to make very clear, and it's the opportunity cost of not making the right decisions at the right time when it comes to taxes. In this case, we're going to use an example that almost everybody's going to be familiar with, the S-Corp. Now, disclaimer right up front, you need to be working with a tax professional to assess whether an S-Corp even makes sense for you, no matter how big your business is. But the numbers we'll be demonstrating here are going to illustrate very clearly the example of why you need to be making decisions like this proactively. Let's say you're a real estate agent and your net income is $160,000 after your expenses. We're going to use some rough numbers and calculations here to make this example simpler, but what's going to happen here is you're going to pay between $22,000 and $23,000 in self-employment taxes. Now, let's say we can hypothetically convert you to an S-Corp. Let's say we determine $80,000 is reasonable compensation for you, and you will only pay payroll taxes on that $80,000 versus paying self-employment taxes on the $160,000. What that's going to do for you is save you over $11,000 in self-employment taxes that year. And we're going to round that down to $10,000 to account for some other taxes that arise and some costs that arise with being an S-Corp and running a proper business. Now we go back to you, the real estate agent, the business owner. Let's say this is your situation, but you've hesitated on working with a professional and getting this done proactively. Well, the example we've drawn up should be self-explanatory. Even after factoring in some costs, what you've done is missed out on 10 grand of tax savings this year. And if you extrapolate that out over 4 years, you got it. You've missed out on $40,000 in tax savings before you make any other tax decisions. Now again, this is a rough example, but this is the meat of tax planning. You have a lot of decisions you can make. You have a lot of things you need to line up with your financial plan and your goals for life. And when you do that properly, the right way to categorize things comes about, the right way to place yourself comes about, and these tax savings just start rolling on top of each other. It starts with a conversation. Tax prep ain't tax planning. What you need is tax planning. Let's get you in with a little tax planning. Let's set you up for success. Let's make sure you're proactively looking at things and setting yourself up to grow properly. Come back for more little tips on how you could be saving better with taxes. Talk soon.